What's going on, YouTube? This your boy Romeo Trading back again for another video. Before we get started, special shout out. We have reached 100 subscribers, 101 right now as I'm making this video. I really appreciate you guys for supporting the channel. Supporting me, supporting, just the investor day trading lifestyle. I know you guys are a part of it. I hope you guys are becoming more successful. I hope you guys are learning more and more each time. So today I want to make kind of a special video today. And just really, kind of dig into starting out in trading. So I kind of put together a little PowerPoint. I hope you guys enjoy. I want to kind of get straight to it, so this won't be a super long video. But I'm gonna go over a few things, so just bear with me. I got 5 slides, kind of just to talk about some of the, the terminology and some of the key things, just need to get started. I don't want this information to scare anybody away, because that kind of fear never gets you anywhere. It's good to really know what you're up against when it comes to this type of stuff. So I hope you guys stick to the end of the video. Really soak in some of this knowledge if you guys aren't familiar with trading, investing, stocks and stuff like that. I'm just going to talk about stocks today. I'm just going to talk about, trading stocks, kind of my game plan, how I approach it, and how you could as a beginner. So right now, I got this slideshow right here. So just to get started, we're going to be going over what is day trading, what is a trading account, different account types and buying power. We're going to talk about order entry, and we're going to talk about risk management, and I'm going to show you guys some examples of each of these items as well. So starting with the first slide, a trading account can be any investment account containing securities, cash, or other holdings. Most commonly, trading account refers to a day trader's primary account. The assets held in a trading account are separated from others that may be part of a long-term buy and hold strategy. So as you see here, these are a list of a lot of the, a lot of famous brokers. I forgot to put Robinhood on here as well. Robinhood is another, another company that you can use for trading. You got TD Ameritrade, you got, E-Trade, you got Fidelity, Merrill Lynch, Morgan Stanley, Vanguard. These are a lot of big name companies, and Robinhood as well. For anybody that has a Robinhood account, a lot of this terminology can apply to you too. But I personally use TD Ameritrade. I use the Thinkorswim platform to buy and sell stocks. It's real easy to set up. I won't get into the actual setup of these accounts. You pretty much just go to the website and, create a brokerage account, create an online account. It'll ask you about, whether what type of investments you're looking into. What I like about TD Ameritrade, I'm not sponsored, by the way. So I just like TD Ameritrade because of the customer service. When I first started out, I called customer service, and they was real helpful. They helped me get everything set up. They walked me through pretty much the whole process. So that's why I rock with TD Ameritrade. So, that's why I've pretty much been rocking with. But like I say, you can start an account without any of these, any of these people here, any of these companies here. It's also different apps like Stash and Cash App. There's a lot of apps like that you can buy and sell stocks on, Bitcoin and stuff like that. But what we're going to be talking about today is kind of taking control of that, because a lot of that stuff is kind of a one-click wonder, and you don't have to do too much. You just put in your account information, push a button, and you're pretty much set. What I'm going to be talking about is you pretty much really going to be taking control over your trading account. You're going to actually be controlling your entries. You're going to be controlling your stops. You're going to be controlling your profits. Even though, you can buy stocks with, Cash App and Stash and stuff like that. If you're looking for a long-term approach, this is probably not the video for you, but, these ideas are for long-term. So, most trading can be done over long time frames. You got your yearly charts, you got your monthly charts, you got your weekly charts, you got your dailies, you got your 60-minute, your 15-minute, your 5-minute, 1 minute. So trading happens at all time frames. So don't ever feel excluded. I don't want to, bring you down with too much information. So I'm just going to keep it simple. But yeah, these are some of the accounts you can use. Like I said, I use TD Ameritrade. They have a Thinkorswim platform, and that's what I use. So that's going to be what I'm going to be using in my example today. On to the next slide. Different account types. You know, if you're interested in trading stocks, something you need to know, if you're looking to day trade, as in you buy and sell securities, you buy and sell stocks in the same day, you need at least a $25,000 account in order to trade as much as you want in a single day. Don't get it, you know, don't get confused, don't get discouraged, because there are ways around that. That's just, like I say, that's the main thing. Anybody that's looking to day trade, if you ever heard any, you know, news and, you know, any type of hype about day trading, you need at least a $25,000 account in order to actually day trade as much as you want every day. So, you know, that is an option if you do have the funds for that account. And you may hear the term PDT, which is pattern day trader. So, you know, if you have that kind of money and you have that in an account, with most brokers, you're allowed 2-to-1 to 4-to-1 access to those funds. So that means if you have a $25,000 account, you have access to at least $100,000 in buying power. We're going to talk about how important buying power is later on in the video, but just kind of keep that in mind. The next topic is a margin account. Access to a margin account normally requires at least a $2,000 account size, and that'll allow you access to at least 2-to-1 on your money. So if you have $2,000 in your account, you'll be able to trade. You have at least $4,000 in buying power, and that goes up from there. So if you have a $3,000 account, you have access to maybe $6,000 in buying power. So that's kind of how margin works. It kind of give you extra funds to buy securities, but you kind of got to be careful with it. You know, we're going to talk about risk management and stuff like that as well. Now, with a margin account, you can't day trade as much as you want, but you can buy and sell as much as you want overnight. So you know, and then you get three day trades per 5 days. So if you want to day trade 3 days out the week, you can do that too. Or you can, you know, if you plan on a longer strategy, you can buy Monday and sell Tuesday. You can do that as much as you want. You can buy Tuesday, sell Wednesday, buy Wednesday, sell Thursday, buy Thursday, sell Friday. So you can do that as well. It's always ways around it. But yeah, so pattern day trading account, 25,000 plus. Margin account, you need at least 2,000. Now, you can just have a cash account. You don't necessarily have to have $2,000 to start trading. So I don't want these numbers here to you know, to kind of scare you guys away. If you have $100, you can start trading with $100. You can start trading with $10. You know, it's no limit. I'm just letting you know what tools you have access to. So if you have $2,000, you have access to more buying power, which means you have access to make more money at a particular time. You have access to be a little bit more aggressive with your trading style. So, you know, if you don't have $2,000, let's just say you got $500 right now that you want to invest. You're not actually risking the whole $500 on a trade. Not with my trading style, but that $500 would be used for buying power on a particular stock, and you'll be able to control your risk, as I'm gonna show you in the next few slides. When it comes to account types and buying power, it's a couple things I want to go over. The first one is stock buying power. This is you know, one of the criteria you're gonna see, you know, on your dashboard. Let's just say, so your stock buying power is gonna be your money plus your margin, you know, plus or minus your investment costs. So just like I was saying, your stock buying power is going to be, if you have a pattern day trading account, and you know, hey, you got 25,000 plus in there, your stock buying power is going to be 100,000. That's going to be your total buying power, including your money plus your margin. So that's your 25 plus your 4-to-1, your 4-to-1 PDT money, which is going to give you 100,000 as stock buying power. Now your net liquid is going to be just 25,000. That's going to be your actual money. Like I said, and that's where margin comes into play. So, you know, if you had a $2,000 account and then they gave you 4,000, then your stock buying power would be 4,000 and your net liquid would be 2,000. That way, that terminology doesn't, you know, confuse you. You know, you may buy $4,000 worth of security and you may make profits on that. But your net liquid is just going to be the 2,000 plus whatever profits you may make or lose. So, you know, just kind of keep that terminology in mind. The next one is going to be your cash and sweep vehicle. It's, you know, it's kind of similar to net liquid. The only thing is that value is going to change based on what type of investments you actually buy into. So as you start buying stocks, that cash and sweep vehicle is going to reduce because that's your money minus your investment costs, plus or minus your investment costs. So, you know, if you got a $2,000 account and you buy $1,000 worth of a particular stock, that's going to reduce your stock buying power. I mean, that's going to reduce your cash sweep vehicle depending on if you have margin or not. If you had a $2,000 account, you got $2,000 in margin, which means your stock buying power would be $4,000. Your net liquid would be $2,000. If you had a $1,000 worth of a particular stock, that would reduce your cash sweep down likely 500, while the other 500 would go reduce off your margin. So it kind of gets splits between your margin. And then the next topic is going to be maintenance cost. This is the amount that must be available in your account whenever you make a particular purchase of a stock. So if that $1,000 stock you just bought, you may have maintenance costs of maybe $500 or maybe $1,000. So you may need $2,000 in your account just to successfully hold that stock, and that is based on the broker basically trying to protect themselves. So you know you have a $4,000 account, you spent $1,000. They're going to require you to keep at least $1,000 in your account. That way you won't overextend yourself. So that'll bring so if you have a 4,000, if your stock buying power is 4,000, the actual stock costs 1,000, and your maintenance cost is 1,000. You're going to be left with $2,000 of buying power. That's kind of how that works. I know it's a lot to take in, but that's just kind of how it works. So your maintenance is kind of gonna double, especially when you have a margin account, because they want to make sure you have the cash to cover your investment just in case the risk is too much. But we're not gonna get into that those type of trades today. You guys don't have to worry about that. But these like those are the four main components that you want to kind of keep in mind when buying stocks. And if you have a any type of dashboard that's going to have that, you want to at least have those four options on there as well as any commissions or fees if your particular broker has that with their platform. So yeah, those are the main things as far as account types. And like I said, with the cash account, if you don't have $2,000, you can pretty much just trade whatever cash you have minus any type of maintenance. So if you only have $1,000 to trade, then you got to kind of be careful because you don't want to max out that whole $1,000. You want to leave a little room in there just in case it doesn't go your way. So that's why margin is very important. I wouldn't be where I am today without margin. Margin is like I say, it helps. It helps you be more aggressive, but you have to be responsible with it as well. Like I say, great power comes with great responsibility. So definitely keep that in mind. But moving on to the next slide is going to be order entry. So you got your account set up. You kind of understand some of the the terminology when it comes to how much your buying power is and stuff like that. The next thing you want to do is start buying stocks. So the four order types that I use is going to be market orders, it's going to be stop market orders, it's going to be limit orders, and it's going to be stop limit orders. So those are four separate order types. I'm going to break down how I use each one as well. So basically, a market order fills instantly at the current market price. It's whether you're buying or you're selling. So if you want to get into a stock and you want to just do a market order, it's going to fill you as soon as the market opens or wherever the market price is throughout the day. That's with buying and selling. You're only going to get filled during market hours. So between 9:30 and 4. Those are the only hours you're going to get filled on with market orders. I rarely use market orders unless you just want to exit a position, unless you see something, if you kind of want to go outside of your plan or something like that, you can use a market order. But that is the most common order to use whenever you're trading. But I want to go into examples of OCO bracket orders. This is kind of an advanced order type, but it is something I suggest that you guys get familiar with, as anybody that's looking to swing trade. buy and sell over a course of a couple of days. You might want to have orders set just in case you have you have a job or something like that. And you don't want to have to watch your stock all the time. You don't want to have to try to, watch it and keep up with it and constantly be checking your phone. You can just kind of set it and then just let it do what it do. But I just kind of want to throw that out there. It's an OCO bracket order. I'm gonna show you how to use it in Thinkorswim as well. So just be patient with me and I'll show you guys that as well. Inside that bracket order, you're gonna be given an option for entry price. Now with my entries, I always use a stop limit order to buy. Now this order is basically, it's two order types in one. You have a stop and then a limit order. That stop is pretty much what activates the order. So if you want to get in at $10, you would put your stop at $10 and your limit at $10. Meaning you want your broker, to get you in at exactly that price whenever the market price actually gets there. So just keep this in mind. With a market order, you get filled wherever the market price is. With a stop limit order, you get filled exactly at that price if those shares are available. And with certain account sizes, that's simpler, easier said than done in certain cases. But with swing trades, it's more likely for you to get filled. So your stop limit order, that's going to be pretty much your risk. Your entry price. You can use a market order, and you can send it, and that's just going to be your price. We're talking about actually trading here. So we want to be a little bit more specific. We're trying to follow trends. We're trying to get ahead of the trend. So we want to get in at a particular price. We don't want to just have our money in limbo for days and weeks and months at a time, and it's just not going in our favor. We want to actually get in at a particular price, and we want to see if the stock moves in our favor from that price. We don't want to just get in and hope that it goes a certain way. We want to get in when it's going our certain way. So that's the steps I take when I approach trading. As far as my entry, I always want to get in at a certain price. Based on the chart, based on what's going on, based on how the market's moving, I want to get in at a certain price. So I always have a certain price in my head. And with that price, why that price is so important, because it helps me understand my risk, which is the next tally I got. The risk I use is stop market order. So that basically triggers my market order to fill at a certain price. Now what this does, so the stop is going to be at a certain number. So if my entry is $10, if it drops down to $9, I'm getting out. That would be my risk area. That would be my stop area. That would be the area I want to sell if it gets too low to control my risk. So if I'm risking $1,000, I don't want to lose more than $1,000 on the trade. So I want to get out exactly at $1,000. So I won't be down $5,000, $10,000 at a time. If I'm down $1,000, I get out, and then, like I say, you can always get back in. That's something that I don't, people don't understand, that you can always get back into a trade. Just because you stop out, it happens. Part of trading. But like I said, I don't want to confuse you guys too much with it. Just kind of keep in mind having an entry, having a particular place you want to get in, having a particular place you want to get out, and then having some type of target area. How much money are you trying to make? Are you trying to make $100, $200, $300, $400, $1,000, $2,000, $10,000? These are type of things that you want to have in mind before you take a trade. You kind of got to have your goals kind of lined up. In most cases, you risk in maybe 1% of your account. So if you have a $10,000 account, maybe you just want to risk $100, maybe. So if buying 100 shares at $10, and your entry is $10, your risk is going to be $9. If you're just trying to flip your $100, then at $11, that should be your target area. So the target area is going to be a limit order to sell. And that's just a regular old limit order to sell. It's going to get you out at that particular price. And you're not going to get triggered out until it hits that particular price or more. So if you're holding overnight and it gaps up and it's way above that price, as soon as the market open, if you just have it for a day order, it's going to trigger as soon as the market opens. You'll be exited for whatever profits on that particular trade. The same with a stop market order. There are instances where it may get under your stop order if you're holding overnight. But if you're taking your swing trades correctly, You may lose a little bit more than you planned to, but at least you'll be controlled once the market opens. So definitely keep that in mind. Like I said, these are my three favorite order types: stop limit order to buy, stop market order to sell, and a limit order to sell. That pretty much sets up my risk, my risk management, and my order entry in my target area. So with your risk, that's where that's where you can possibly lose your investment. But you're controlling how much you want to lose. Like I say, you can have a $4,000 account, but you're not risking your whole $4,000 on a trade. You're risking maybe $400 or maybe $40 or maybe $100. You're not risking the whole thing on a trade. So keep that in mind as well. Just because you have $4,000, that doesn't mean you're going to risk the whole $4,000. You're not risking your entire investment on one trade. So we're going to get into that a little bit deeper. Just kind of bear with me. And another thing to keep in mind is time and force. That's kind of what I was going over. So you have a day order is only good for 1 day. If you set up a bracket order, the default is normally going to be a day order. And then you have GTC, which is good until canceled. When you're swing trading, this is what you would use for your swing trade order entries. That way, once you set them, you don't have to go back and check on them. With a day order, now if you're day trading, you can most likely use a day, time and force day would be fine. But if you're swing trading, you want to kind of use the GTC time and force, which is good till cancel. So that way you don't have to keep checking on it. The order stays in there for days and weeks at a time until you actually cancel it. And you can also change these orders as well. You can adjust them and things like that. I hope this is not too. I hope this is not too technical. I know it sounds extremely technical with me even talking about it. I guess because I've become so familiar with the terminology, I've kind of lost sight of how it is to be new at this. So I just hope some of these things start making sense as I get into it a little bit more. But I want you guys to really understand that it's really not as difficult or require as much money as you may think it does. That's kind of the main thing I want to kind of get out there. I kind of want you guys to kind of trust me on this one. But moving on to the next slide, we have risk management. Now, this is one of the first things I learned when it came to trading stocks, and that's dealing with trading range. A lot of people don't talk about trading range. A lot of people don't talk about it because, I don't know why a lot of people don't talk about it, but this was the most important thing to me. When I sit down and decide I want to learn something, I really want to learn every aspect of it. And the trading range is one of the most important things people just don't talk about. So I kind of broke it down. So let's just say, you have a $4,000 account. Let's just say you have a $500 account. You have a $10,000 account, $25,000 account, $100,000 account. No matter what account size you have, the trading range is gonna kind of be whatever the stock market gives you. So no matter what your account size is, this risk management is always going to be consistent. So if your trading range is 5 cents, all these examples here on the left is if you're risking $100. So if your idea, I'm gonna say idea. I'm not gonna give any specifics. I'm just gonna say idea. We're gonna go deeper into this after this presentation is over. So I want you guys to take a picture of this, lock it in, because this is really gonna be your cheat sheet when it comes to being able to go ahead and put your ideas on the table. So if you're wanting a stock to go up higher, you got to understand where the high of that particular trade is going and the low of that particular trade. So this is basically you're risking $100 in a particular trading range. So this is how you control your risk. So if the stock has moved up and down $5, then your risk is normally going to be 20 shares of that, whatever that particular stock is. This is trading range. So if the stock moves up 5 and moves down 5, that's a trading range. If it moves up 2.5 and drops down, 2.5, drops down what? 5. So move up to 2.5 and drop down 5. That's still a $5 trading range. I think the math on that is right. So plus 20, plus 250. I'm sorry, I said 25. Plus $2.50. Minus $2.50. Put it back at break even. And then another minus $2.50. Puts it at negative, $2.50. I'm just throwing out numbers at this point. But I think you guys, I don't know if you guys understand. But if the stock's trading range is $1, it moves up and down $1. You can trade within that $1 range is what I'm saying. So if $1 is, let's just say $1 is here at the EX here, and then 0 is down here, the stock can move anywhere between this range, if that makes sense. So if $10 is here under this R, under risking $100, if the $10 is here and $5 is here, this would be your $5 trading range. You can trade anywhere within that $5. I should have kind of put a picture up of it, but when I pull up Thinkorswim, you guys will be able to kind of see it a little bit better. But definitely take a picture of this. Starting out, this helped me a lot. I knew if my entry and my stop I know if I had a 5-cent range and I wanted to risk $100, I would need 2,000 shares. I already knew it. If I wanted to risk $100 and my range was 10 cents, I needed 1,000 shares. The same with 20 cents. I needed 500 shares. 25 cents, I need 400 shares. And this simple math is basically you're done right here, where your risk amount divided by the trading range equals your share size. So if you're risking $50, right, your trading range is $1, you would need 50 shares. If you're risking $10, your trading range is $2, you would need 5 shares. If you're risking $200 and your trading range is $5, you would need 40 shares. If you're risking $500, the trading range is $50, which your stocks are pretty expensive. You're gonna just need 10 shares. So, like I say, this is kind of how we take control of our trading. So, if you're risking, let's just go back to this example over here. If you're risking 10 cents per trade, you're gonna know every 10 cents is gonna give you $100. So if it drops 10 cents, hit your stop, you're out of $100. But if it doesn't, your idea works. Every 10 cents above your entry price is gonna be $100. So if you get in at $1, if you have 1,000 shares, you get in at $1, right? If it drops down to 90 cents, you're gonna be negative $100. That's how it works. If you go to 110, you're gonna be up $100. If you go to 120, you're gonna be up $200. If you go to 130, you're gonna be up $300, and so forth and so on. So if it goes up to $2, you're gonna be up $1,000, because however many shares you got, if your stock price goes up $1, you're gonna pretty much get however many shares you got. That's just how the math works. So basically, I'm trying to get you guys to understand the math. Like I say, this cheat sheet will kind of break it down. It's really that simple. And like I say, if you're trading, I normally trade stocks that's under $10. So it's really easy for me to be able to know where my entry is, to know where my risk is, and to know where my target is. It's real easy for me to figure it out with just this little cheat sheet here. So like I say, if you if you need $1, if it's $1 range, the stock normally moves up and down $1 in a day, something like that. You would need 100 shares, because you're risking $100, right? So you're basically gonna want it to go to $2. If you get in at $1, you're gonna want it to go to $2. That's gonna pretty much be where your target's at. If you're just trying to make $100, if you're trying to turn your $100 into $2, well, if you're trying to make $100, put it like that. But yeah, this is basically a quick cheat sheet for you to understand how easy it is to get shares. What was I doing I forgot what I was doing on this side. Oh, I was just reversing the math. Yeah. I'm sorry. I was just reversing the math. I'm sorry. I forgot what I was doing. So yeah. So basically, for this 5-cent example, if you need 2,000 shares for a 5-cent move, 5-cent trading range move, you need 2,000 shares. That's basically $100 divided by 5 cents equals 2,000. That's basically what I was trying to do over here, but I want to actually write it out so you can actually have something to mentally be able to, to write down. Whatever you're risking divided by the actual trading range equals the share size. And I'm going to actually go over some real examples. So if you guys stick around, you'll be able to actually see me set up orders in a real fashion. So just bear with me. But yeah, that's this slide, and that is the end of the actual slide show. So I'm going to move on to actual Thinkorswim. Okay, so this is a paper trading account. This is not my actual account. As you can see, the stock buying power is 318,792. You can see my net liquid is 209,396, as well as my cash sweep being the same. Why is that the same? It's because I haven't bought any stocks. So as we start putting orders into the system, you're gonna start seeing those values change. That way you can kind of get into knowing exactly what you're looking at. You can kind of see exactly, where your money's going, how much money you're making. So, let's just kind of jump into it. I normally trade stocks under $10, but I'm gonna actually, kind of go over ideas that you guys are probably familiar with, like Apple. I had Netflix up there as well. So let's just look at Apple for us. And I'm going to start on the monthly time frame because, you guys may not want to jump straight into day trading. Guys may want to kind of take it slow, kind of get familiar with the system, kind of want to get warmed up first. So I'm going to start off with the monthly chart. I'm going to take off the daily and I'm going to take off the weekly chart. So this is just a monthly chart. So looking at this chart, I got, it's only really two real indicators on this chart here. That's volume. That's like kind of how many shares are actually being traded. I can't really go into detail on volume right now. I kind of want to keep this video as simple as possible. So if you guys enjoy this video, please leave a comment and we can start getting in depth with talking about how important volume is and how you can kind of be more aggressive with your trading based on volume. But we're just gonna look at charts right now and start setting up some ideas. So, let's just say we didn't know Apple was gonna run from $40 all the way up to 140, right? Let's just say we didn't know, okay? Let's just back this up like we don't even know what's going on, right? Let's just back this on up. Let's just back this all the way up. I say back it up to probably here, right? So, let me see, it's 2015, by the way, because this is a monthly chart. So this chart's kind of old, but just to kind of give you an idea of what's going on. So I don't have any moving averages and stuff like that on this chart. If you're familiar with moving averages and stuff, I didn't want to put this in this video because there's already a lot of information in here. I didn't want to crowd kind of foundational information. So I kind of want you guys to kind of get familiar with charts. So looking at this chart, I want you guys to kind of put this in your head. If the month is green, buyers are in control. Kind of think of it like that. And just kind of have that as a foundation for thinking when it comes to, buying and selling a stock. So, let me go back just a little bit more. I kind of like this area here. Because it's something I would actually trade. So this was what 2013, 2015, 16. So that doesn't really matter. I'm trying to find an idea that's actually in my trading range, so I can actually, kind of go over it with you guys. But let's just see. Let me see. Green buyers in control. Let's focus over here in this area here. So Apple, kind of ran up here to $33. This is the actual market price up here in April at this time. It kind of had a nice pullback into the next year. And then it kind of, found support here in this area. Seems like, I know you guys are probably not going to read it the same way I'm reading it, but I kind of want to just talk you through what I'm thinking and what I'm actually looking at. Even though we kind of know where the future is going, let's just say we don't. Let's just say, you just get into stocks and today is this day here and we want to see what's going on. So, let me see here. The high of this month, which you can, if you guys look up here, whenever you go over actual candlestick, which these are candlesticks, you can actually see some information here. So I'm over this month of November, this red month in November. I'm looking up and I see we have a high of 28.44. We have a low of 26.02. The actual range, which is R, is going to be $2.42. Like I said, that's up there in this little bar here. Guys, can you guys see that? You might not be able to see that, but that's what this bar is. So the high of this bar will be roughly 28.50. Let's just say the close is 27.50. So I want to make this as simple as possible. That's why I wanted to pick this particular stock. Let me see. And the reason I'm picking this idea is because this would be an idea I would normally take. Just because of other factors. But like I said, let's just say you want to start investing. You like Apple, you got an Apple phone, you got an iMac, you got the MacBook, you got all Apple products. You want to invest in this company. It's only it's only $27.63. It's Monday morning. You want to start getting into a stock. You want to start investing. You want to have an order set up in the system. Well, let's just look at Apple. I'm gonna go ahead with Thinker. This is the Thinkorswim platform, by the way. I'm looking at this chart. I want to get in. I see the high that it put in for this month was $28.44. I'm just gonna round it up to $28.50. I'm gonna right click and I'm gonna do buy custom order, and I'm gonna do buy with OCO bracket order. Like I said, this is a monthly chart, so it may not trigger overnight. It may actually not trigger within a couple of weeks. But we don't want to have our money tied up in this particular stock if it's not doing what we want it to do. So we're gonna use a OCO bracket order. You can just straight buy, but I want to teach you guys about the OCO bracket order, one of my favorite bracket orders. So that's gonna bring up this little order entry tool here. This is, like I said, this is a paper trading account. This is not a real. This is like Monopoly money. You get to practice here. You can also practice in live market conditions. So if you guys want to get comfortable day trading, actual buying and selling in the same day, you can use this in practice without using real money. So definitely this is a great tool by Thinkorswim. So let's get into it. So let's just say, like I said, the high of this month was 28.44. So let's just say we want to get in. We want to set up a stop limit order at, let me see here. The high was 28.44. We're going to put our stop at 28.45, and we're going to have our limit set to 28.50. So that way, if Apple trades within that range, because it's not up there yet. Right now we're at 27.63. So we're not up there yet. But if this stock proceeds to go back up to the high, we want to catch it while it's going up. So if it proceeds to take out that high, we want to be triggered in. We gave it a little room because I'm not sure how fast this stock moves in this particular cent range. So as you see here, so let's just say we're risking $100 with this right here, right? With this particular dollar range, with $100 risk, the high is 28.44, which we're gonna do 28.50 just to kind of make it even. The close is 27.63. We're gonna use 27.50 just to make it even, just so it's an even dollar. Just like I said, I'm just putting out this example, just so it's an even dollar. We know we're gonna need 100 shares if we're risking $100 per dollar that it goes, right? So this is pretty much gonna be our order. It's pretty much already here because $100 is kind of the base amount. So like I say, my next example is gonna be a lower time frame stop because, like I say, the values are a little bit more different. $10, the values kind of change. You're not gonna get a dollar trading range. Like I said, this is a monthly chart. So in the entire month, this stock has moved exactly $2.42. So between the top and the high of this month and the low of the month, it has moved $2.42. Oh, excuse me. So that just lets you know what type of price movement. In this particular month here, it actually moves $7.64. So from the top of this candle here all the way to the bottom, that's what it moved. It moved a whole $7.64. So that's a wide trading range here. So just focus on this November month. We're not taking the entire top and the entire bottom. We want to be a little bit more aggressive with it. We're going to take the top by the actual close, around the closing price. And in this particular idea. So, after this month closes, so let's just say we're planning for December. It is November. We're planning for December, right? So this is a monthly chart. This applies to all time frames, by the way. So if this was a daily chart, it would look exactly like this. If it was a 60-minute chart, it would look exactly like this. So the time frames don't matter. The time frames don't matter. This can be applied to all time frames. Okay? I want you guys to understand that. I feel like I'm actually talking to people, which I'm going to be talking to people. So I want you guys to understand that these charts, they apply to all time frames. So inside of these months, you're going to have charts that look exactly like this or similar to whatever's going on in that month. This is going to let you know who's in control for what month. So back to this idea. 28.50, that's going to be our limit price. So it's a stop limit order. Once you change it from limit to stop limit, it's going to automatically give you that stop. So limit is how much you're willing to, the most you're going to pay for this stock. So once it comes up and hits 28.45, the most this trade is going to cost you is 28.50 per 100 shares. And then, the least would probably be 28.45 or lower, depending on how that stock moves. Let's just say you're going to get in at 28.50. So that's exactly what you're going to pay for this stock. That way you know exactly how much buying power you need, and you'll know exactly, what your actual risk is. Because, if you get in at 28.50, you got at least to 27.50 before you actually lose any money. Well, that's when you actually lose your whole. If it comes all the way down to 27.50, you would lose $100. Just $100, right? So we're getting 100 shares. We have our stop limit to buy. We're going to change this. This is TIF. This is the time in force. We're going to change that to good to cancel. This is extended hours, and this is good to cancel extended. We're not going to use those. We're just going to use the GTC. We're going to put that on all orders. So we got a entry order, which is going to be in green here to buy. We'll have 2 sell orders in the system, right? So we're risking $100 on this trade. This is a monthly idea. We're gonna, let's just say this is a monthly idea. This can apply to all time frames. If it's a weekly idea, daily idea, whatever. Let's just say we're risking $100. We just need $1 out of it. So from 28.50, if it moves up to 29.50, we made $100 on it, right? That's it. We looking to flip it. This is kind of a slow target, kind of a small target. But we're just looking to double our money basically. So we're basically just looking to make $100 on this particular trade. That's if our target is 29.50. Now, as you raise your target, you risk losing more money the higher you raise it. But if you got a good entry, you never know. So 29.50 will be our target. So if you're trying to make $100. So let's just say you want to make more than $100 on this particular trade. All thing you do is just increase your target. So every dollar over 28.50 would be $100, right? So if we do 30.50, just gonna type it in. So if we do 30.50, that will be $200. You got 100 shares. So if we go back to our cheat sheet, we would know that if our trading range is $1, we get 100 shares. Every dollar would be $100. We look at our cheat sheet. The range is $1. 28.50 by 27.50, that's what we're risking. We're risking $100. So if it comes all the way down to 27.50, we lose $100. We're done. We find another trade or whatever, right? But if it doesn't come down to 27.50, if this idea continues to work, we're gonna make $100 per dollar that it goes up. Now, I'm gonna show you guys a couple of tricks as well. So let's just say we want to turn this $100 into 2. We're gonna risk $100. We're gonna try to get $200 on it. So we're gonna leave it at $30.50 for our limit order. That's gonna be our target order. Okay. So we're gonna submit this order. You guys cannot see this next screen, and I really hate that. It pretty much goes over your actual order confirmation. To buy 100 shares of Apple at 28.50 is going to cost you $2,850. That's what it's going to cost. So you can see how account size is important, because you're not risking, like I said, if you got $2,000 account, you got $4,000 in margin, you'll be on the safe side. You'll be good. You'll be fine. So you can kind of see how trading range and actual setting up trades are important when it comes to, putting in market orders. Even though you need $3,000, you need $2,850 to buy 100 shares of Apple at $28.50. If you had a $4,000 account, you would probably be on the safe side. So if you don't have $4,000, you probably would need less shares, which means if you don't have $4,000, let's just say you only can buy 50 shares of this. That means your risk level is going to be bigger, and your target level is going to be bigger. You're basically adding $1 to it. So instead of it being $28.50 by $27.50, it would be $26.50, because you only have 50 shares. So you to risk $100, you just need a $2 range. So your risk risk area gets bigger, and your target area gets bigger as well. So being able to go from $100 to 50 to 100 shares to 50 shares, to make $100, it'll have to go to 30.50 to make $100 with 50 shares. If that makes sense. I'm gonna say it again. If you can't buy 100 shares of Apple, and you only can get 50 shares, then you would need for it to at least go $2 to make $100. Your risk would be $2. So instead of $28.50 by $27.50, it would be $28.50 by $26.50. That would be your stop. And then your target would be $30.50. That would be your target area to make $100. So to make $200, you would need it to go to $32.50. Now, if you check your cheat sheet, that range is what you'll need to make that $100 at that particular range. For $1, with 100 shares, you just needed to go to $1. For 100 shares, for 50 shares, for $100, you would need it to go $2. That cheat sheet really solidifies all your actual trading ranges. So kind of keep that in mind, because a lot of people get into trades, they just throw a lot of money in it. They don't know where their target is. They don't know where they need to be at to make a particular amount of money. So this is kind of why I want to really make this video, so you guys can understand how it works. Yeah. And once you send that order, I wish you guys can see this. But if you guys, like I say, once you click confirm and send, it's gonna pop up to where you can actually see how much it's gonna cost you, how much the actual position. Like I said, you're buying 100 shares of a $28.50 stock, so you can pretty much do the math. You just multiply $28.50 times 100, and that's gonna give you how much it's gonna actually cost you. How much your actual account size is gonna take a hit for it. So yeah, that's that example. I'm gonna send that so you guys can actually see how to look in the system. That's how to look. So you're not gonna get in until it actually gets up here. Until it gets up here above this red bar. So currently the bar is right here. Wherever this median is, that's where the bar is closing at. Right? So and that's basically it. You set your order in the system, and then you just let it work. So this is why I like bracket orders. You can just get in wherever you want to, but that's fine. But that's not how I trade. That's not how trading is. Investing, you just get in whenever, but that can definitely cost you if you get in at the wrong time. See, it works for people that actually are lucky enough to get in at the right time. So if you want to get into and just throw your whole savings in this month, then it works out great, right? If you're in July, you want to start investing. If you want to start investing in this month here, you throw your whole life savings into this. You just max out all your whole account. It may work out because the stock eventually worked up for the next year before it, you had a whole year of it just going up higher and higher. So it works out. But let's just say you're in this month here, and you want to throw your whole life savings in it. But you're going to be sweating this thing out. Like most of your savings is going to be gone in this month. You're going to see your savings probably dropping in negative here, if you just throw it all onto this stock in this month and this type of month happen, you got to ride this thing out. But they don't all come back. You may not get a chance to get out where you got in at up here. Because, like I say, you don't see this month. You getting in over here. You getting in July. And then, you're already in the negative. And then August hits and you're really in the negative. I'm talking about you really, like, it comes all the way down to $23. This is why I don't consider myself an investor. Because I don't want it. I don't want it down here. If that's the case, I would have just put an order to buy it down here. I'm not just going to jump in at any random month. Like I say, because if you're new to trading, if you're new to investing, and you just want to throw money in Apple, like I say, if you happen to throw it in this month, you're a genius. You make the best investment of your life because, like I say, we don't know what the future holds. If you threw it in this month, then hey, guess what? Next month you're already green. The month after that, you're still green. Your investment looks good. Okay, bam. You're never in the negative after this month. You're never losing money. And, we don't invest to lose money. We invest to make money. So I want you guys to keep that in mind. You want to make money. You don't want to lose it all in one trade for a company that doesn't know you. Just kind of be mindful of, where you put your money and control your risk. That's all I say. Control your risk. And that's what this stock market is for. So if it ever drops below that, we want to get out. I'd rather lose $100 than lose $1,000. If I'm not trying to lose $1,000, I just if I only want to lose $500, I'm just gonna lose $5. I'm not gonna lose $2,000 if I only plan on losing $5. So always control your risk, even with investing. Like I say, that's why I want to start with this monthly chart, because this chart here applies to everyone. Anybody that's looking for a retirement, like I said, this is just Apple. The SPY, which pretty much is pretty much the market. It's the top 500 companies. It's all these charts are they're all similar. They're all compatible. You can trade on every company. Every company is not going to go straight up. Every company is not. Well, some companies can go straight down. But just kind of be objective about it. Don't let your emotions cost you everything, because they can and they will. The more aggressive you get with trading. That's why I want to start with the monthly chart, because you got a whole month for this thing to work itself out. You ain't got to worry about every minute, every 5 minutes. That's day trading. You worry about 5 minutes, every minute, every 15 minutes, every 60 minutes. That's day trading. So, not to stray off topic where we at. We already almost at an hour here. But like I said, I hope this video is informational. Subscribe, like, comment. We're at 100 subscribers. I appreciate you guys. I'm gonna keep grinding this out, and I just kind of want you guys to kind of see how it works. Okay. So like I say, this is November. We put our order in. November's over. Let's just say it's November, whatever the last day of November is. It's about to be December. We want to start investing, so we're gonna put this order in. So whenever Apple gets up here, we're gonna get into Apple. We're gonna kind of ride it out, see if we can make some money. So let's just see what happens. So in December, our order gets triggered. Right? So we're in. We have a position. In December, the month opened here, like I said, it closed November here. It opened here. This is the opening candle right here at the bottom. It kind of went down a little bit, right? Then it pushed on up. It probably was a lot of up and down in this, in this. It didn't just go straight up. Like I said, this is a monthly candle. It took all month to make this candle. Like I said, you can apply these to weekly candles, daily candles. It applies to all time frames. But this is a monthly chart. Like I said, it took all month to get to this candle. But like I say, before the end of December, you was in Apple. And you was profiting, because like I say, you know, it made a lot of movements in this month, but eventually you got in this 2850 area, and you're already up. You see, you're already up. You was actually able to get out. You get $100 out of it before the end of the month. So, you know, that could have been quick, easy $100. But let's just say you want to wait a little bit longer for it. You know, you just kind of want to see what it does. Okay, so this is the beauty of trading, to being able to control your trades. Like I say, you know, the first month you just kind of let it sit back and do what it do. You don't touch it. You just let it sit back. Like I said, you got in, you're up. You know, you're not negative. You know, you're in the money. So you just kind of, you know, you want your investment to grow, so you're just kind of gonna let it ride up. So okay, so December's over. Okay, you was up to $100, you know, give or take in profit. But it kind of came back and rested. So around this $29 area, you're roughly at like $50 profit. You know, if you got 100 shares, you know, if you got 100 shares of this, like I said, you got in at 28.50, so 50 cents, 100 shares, $50. You needed a dollar for the full 100, so 50 cents would just be $50. So you're up roughly $50 on this. You know, your $2,800 investment, you've increased the value by 50 cents. By the close of the month. So at the end of the month, you're up 50 cents. I'm not sure what the actual percentages is on that. I'm pretty sure somebody will leave that in the comments. Leave that in the comments, whatever the percentage that is. You invested $28.50 and you're up $50. Whatever that percentage is, that's how much you're up for that month. So you're feeling good about it. Like I said, you're actually making money. You're green. You're new to trading. Like I said, it's your first month trading. You're up $50, feels good. Like I said, slow. This is, like I said, you're on a monthly chart, so the movements are gonna be slow. Throughout the month is gonna fluctuate. Like I said, you probably seen your account profits at $100 at one point, but it kind of came back down. You know, you just letting it work itself out. You want to try to make $200 out there, so we need to go to 30.50. Okay, so like I say, this green buy order is no longer gonna be up here. It's just gonna be these two red orders to sell. So if this idea would have came up to 29 and then came all the way back down to 27.50, we would have lost $100. But it didn't. It opened here. It seemed like it went down, right? We didn't get triggered until it actually went all the way back up here. So we didn't get in until it got to where we wanted it to be at. We wanted to get in up here above this red month. We want, like I said, the sellers was in control here. Sellers took out this month. We wanted to move higher, so we got in. We wanted to get in right up here at the top. So that lets us know that the buyers actually want this thing to go higher. So let's just see what happens. Like I said, this is December. Let's just see what happens in January. January, it hits our target. You got $200 in your account. You're done. You're out of Apple. That's it. It's over. Profits in your account. You're done. Hits target. Exactly. Trading. It's an exact science to it. It's an exact science to it. It hits your target. You're out. You're done. That's your limit order. So whoever paid 30, 50, just gave you 100. Just gave you $200. You're out. You're done. Now let's just say you felt so good about your investment, you wanted to kind of increase your target area. And you wanted to kind of reduce your exposure. So let's just say in this month, we took this bracket order and we just kind of raised it up just a little bit. Let's just say we raised it up. We was at what, 27.50. Let's say we raised it up to 26 by 31. 28 by 31. Let me tell you what that does. That reduces your risk. So you're no longer risking $100 anymore. You're risking $50 now. And your target is up to $31, which means you'll be making $250 instead of just the $200. So we don't know what's going to happen in January. Let's just say we wanted to reduce our risk so we can no longer lose $100. We want to just, you know, if like I said, we've gotten up this far, but we don't want to lose a whole 100 after we put in this type of month, nice green month. We finished strong. you know, we finished the month with a $50 profit. We don't want to give back too much. So we raised our stop and we raised our target. I wouldn't recommend this doing too many times. I wouldn't recommend doing this too many times. Or, you know, you don't have to have both of these. You can just I would recommend at least a stop order. That way you can at least control your losses. Right? But like I said, this is video. And then like I say, that following month, January, we're up $200 with a little room to go. So in this month, you can raise this up that other 50 cents to $28.50, and you have no exposure. So now you're not risking anything at this point. You're risking, if this can't come all the way back down, you break even, you lose nothing. This is the art of trading. This is the art of understanding stop losses, target areas, and things like that. So, you know, like I say, Apple's putting out good products. The PR has been hitting good. Like I said, we had another great month. So we reduced our exposure. We still have those 100 shares. This is just basic trading, right? So at this point, it is a brand. It's 2017. You're feeling good. Your investment's up. You're actually already at your first target, but you're not going to sell. You're going to just wait it out just a little bit longer. You know? So January is coming to an end. You're up $200. You decide, you know, I'm just going to adjust my trading plan a little and see where we go. February comes around. Look at that. February comes around. The first day of February, you already are triggered. You're out. You're done. It's over. If you use a limit order, right? You've already got, what is that? You got in at 28.50. 29 is 100. 29.50 is 100. 30.50 is 200, right? 31.50 is 300. So you're up 300 and a little bit more. If you just left this limit order in, you would be out. You would get out as soon as the market opened. You'll be up $300. You'll be done. And that's in what, 1, 2, 3 months. This is, like I say, this is just this particular idea. You're just risking $100. So if that $100, if you were risking $500 on this, if you had, you know, a lot more shares, you had 500 shares. 500 shares at $28.50 would cost you a lot more money. It would cost you a lot more money. Let's do the math. Well, hold on. I'm going to finish with this example first. So if you actually are trading this, you actually had a target, you would be out, but then you would be like, man, I missed this big, huge move here. I missed it, you know, and you know, it happens. It's trading. It happens. Yeah, oh man, look what it did. I sold. I shouldn't have sold. I should have kept holding. I should have did this. I should have did that. It happens to the best of it. It happens to the best of it. So if you don't want to have a particular limit in mind, which I want you guys to develop a plan that works for you, right? So in this idea, you got out, you made $300. You got what you wanted out of it. But like I said, continue to do this. You could, instead of being $300, you could have been up $400 or $500. If you plan on holding this thing for the rest of your life, then none of this matters, right? You're just gonna buy it and hold it forever. None of this matters. But if you're actually looking to trade, if you're actually looking to make money, in a particular time frame, in a particular fashion, then I suggest you use limit orders. Because as you get more advanced, there are always ways to get into trades, you know. Even if you sold into this month, you could have got back in. You could have made $300. You could have bought more shares. The shares would have been more expensive. True, it would have been more expensive, but we could always drill down to a weekly time frame, find a pattern, find an entry, get back in. Guess what? We could still make more money. This, like I say, this is on a monthly chart. So instead of using a limit order, you can use a stop order. So just imagine that the limit order is not there. So just imagine you don't get out, right? Let's just imagine you just using a buy order to get in and a stop order to control your risk, and you just kind of want to let it run and see what it's gonna do. So let's just say the limit order is not there. We're gonna raise our stop. Let's just say we put in this month. We have some PR to hit at the end of the month, and like I said, the beginning of the month we got a nice gap up here. What we're gonna do? We're just gonna raise our stop. We can raise our stop right there. Ignore the limit order. Like I said, hold on, let me second. Yep, so that's it. So you just got a limit order now. So you controlling, if it drops down too low, you're gonna get out. That's basically, it's gonna sell and you're gonna take profits there. So instead of, like I said, instead of having a target area, if you just wanna let it run, which is nothing wrong with that, you just gotta be careful because sometimes you can get tagged out if you trail too close. Just like this bar here. So like I say, if you was in this thing and like I say, you was up here and then you had your stop way up here in this month here, you would have got tagged out. You know, it would have went down even further. But like I say, just kind of be careful riding it too close. But even in this case, you definitely would have wanted to get out because you could have just got cheaper shares down here again. But you know, that's another topic for another day. Then let's just see what happens the following month. So this is January. We got February. Let's see what happens in March. March will go up even higher. So you can take your stop, you can raise it all the way up to $34. So you're basically protecting your profits. If you're buying just to hold forever, you don't have to worry about any of this. If you're just buying to hold it forever, you don't have to worry about any of this. But like I said, if you actually want to trade it, you actually want to control you control your risk. You can have your stop order at 34 after this month closes. After you see it kind of trotting up, you can raise your stop. After this month happened, you can raise your yeah, and you can wait till it closes. You, like I said, to protect your profits, you can maybe before the month really begins, you can maybe move it here to 33, maybe to the 33 area, right? And then as this month start to come to an end, it's starting to push up real good, right? We want to protect some of those profits, so we're gonna raise our stop a little bit more. So like I said, this is a monthly chart, so you probably be checking on this thing maybe once a week. You know, you may keep up with it every day. You know, you may check it just as much as you check your bank account, just to see where, just to see what your money's doing. But you know, actually moving your orders around, you probably be doing this maybe once or twice a month, kind of adjusting that stop. Maybe, just limiting your risk. So you, like I say, we want to catch it on the ride up. We don't want to catch it on the ride down. We want to catch it on the ride up. So like I said, we got in way down here. Got down here at 28.50. Your stock is now worth $36. You're looking at, let me see here. Got in at 28.50. That's 100, 200, 300, 400, 500, 600. You get roughly $700 on your investment. You risk $2,800. No, you didn't. No, I'm sorry. Scratch that. You only risk $100. Your $100 risk now worth $700. And it is March. So you raised up your stop, $34. Right now it's worth $700. But if it comes all the way back down, you're only gonna get roughly five, maybe 6 out of it. It comes all the way back. So as of up here at 36, you may have 700. Comes back, you'd be looking at more like 5. Okay. So let me see, January, February, March. Then you got April. What happens in April? We really didn't push green, but we also see that sellers are starting to take over. So keep this in mind too. This is Apple. Apple's been up for 4 months. It's been green. Buyers have been in control. They've been buying this thing up big time. We got a narrow range bar here that's kind of red. So you got to think, hey, I think people are starting to take profits. People are starting to sell. So you can join the party. You can sell, take your profits, and you can put you a stop order right at the top of this month. That would be my idea. That would be my plan, to get right back in once we get back over this 36.50 area, 36.40 area. And we would basically rinse and repeat this one idea that made us $700, and we can get back in to see if we're gonna make another whatever run it is. Or you can just simply raise your stop. I wouldn't get too aggressive. Maybe 35. Put it in the 35-ish area. That's right at the low. Let me see here. The low is 35.02. So after that month closed, we saw what it did. We're gonna put our stop at 35.02. So like I said, this month here is closed. So let's see, this is April. So May. I'm sorry, I had to count the months. So May, if it decides to keep selling off, we're gonna get out. We're gonna take our profits and we're done. We're gonna get out. We're gonna allow this thing to rest. We're gonna allow it to rest. We're gonna allow everybody that's been buying it up to actually take profits, enjoy their money, whoop-de-woo, all that good stuff, right? So we're gonna wait until buyers are actually stepping back up. So, we're just gonna get in at the high of the month. That's just an idea. It's like I said, you have a lot of different approaches to this. But we're gonna see what it do. So let's just say we want to protect our profits, and we're gonna raise our stop to this little area, and let's see what happens in June. In May. I'm sorry. My months are not good. So in May, guess what? It worked out. But I'm actually doing you guys a disservice right now, because I actually knew what this thing was gonna do before it actually happened. That's not how the real world works, but sometimes people get lucky. Sometimes you're on the right side of the trend, but that's why we have these ideas. Like I say, getting above this green month, it kind of paid off a little bit, but as you see, you ultimately probably would have lost a little money on this one, because it did act like you wanted to go higher, but it did pull back. That's why I post ideas weekly. And if you're interested in a particular stock, knowing when when to get in or where to get in at, it's good to talk to somebody that can actually read charts a little bit better. That can actually tell you when is a good time to buy, where is a good area to buy, because of things like this. And like I said, going into actual technical analysis is a way longer video. But I just want to kind of keep it simple for you guys and kind of see the positives in trading. Like I said, we already understand how to lose money. You get in anywhere, and whatever happens. You can kind of lose that way. Getting in here, not taking your stop loss if it come down to here, and you lose even more money, or actually just losing your $100 and waiting to find another entry to get back in to make your money back. It's another thing. So this is May. The low of this month here is $36. We can raise our stop. We let May work, trigger itself out. It didn't drop down, so we're gonna raise our stop to 36. So so in doing this, we've protected $700 in profit. So right now we're roughly at 900 right now. So we're at 900 in profit right now. But if it comes all the way back, we would take 700 home, right? So you're protecting your profits. So like I say, we're up 700. It comes all the way back. We take our 700. We go home. We're done. That's it. You find another entry, find another trade. Just like that. But like I say, it ran up to 38. So, I'm pretty sure you're really excited. You making money, investment's going good, it's going solid. I'm talking about Apple's moving, you just bought you an iMac, all that good stuff. I'm talking about everything's going good, your investment's making, you're trying to find and it's a lot of more advanced techniques in this. You can always add shares as it's going up. You can always add to positions. So it's always ways to multiply this. So you could have been adding over, you could have had a stop limit order over each green month, and if it triggered, you'd have been, your position size would have grew. It would have cost you more money ultimately, because 100 shares is $28.50. So if you had a small account, it would have been harder getting those extra shares on the way up. But just an idea, it's good to have a nice little nest egg for you to be able to invest, because once you understand this, you can understand what it's like risking $500 on a trade, $1,000 on a trade. So you got to think, if you're risking $1,000 on this trade, you'll be up $7,000 right now on $1,000 risk. Because when this trade worked, it didn't make you sweat at all. Like, it worked and it kept going. Like, they don't all do that. Over here it did. But you got months like this when this little green set up here just didn't work. You would have lost $1,000 here. Over here you would have lost $1,000 here, because it would have came back. You would have got in over this green bar here. It would have triggered. You would have been up. You could have sold. But if you didn't, it would have came back. You would have lost $1,000. You would have been down $1,000 here, But like I say, you can either hold it and hope it doesn't do this and run all the way down. You're down 10 grand. You don't want that. That's why you want to have your stop losses set. So just in case something crazy happens, you take your $1,000 loss and you get out. And just keep in mind, if you're risking $1,000 on this particular trade at 28.50, you're gonna need a lot more than 100 shares. You're gonna need like 10,000 shares, maybe. My math is off. So maybe probably need about 200 something grand to risk $1,000 on this. So just kind of keep that in mind. You're not risking the whole 28 grand or 280 grand. I gotta do the math on it. You just add 2 zeros. So what, 280 grand? I assume, yeah, like 280,000. You need $280,000 account for $1,000 risk on this trade. But like I say, $1,000 risk, you'll be up. May not sound like if you got 200 grand, $1,000 is not that bad. It's if you got 200 grand, risking $1,000 is just like risking $100 with a $10,000 account. It's just $100 is not gonna hurt you that bad. So just kind of keep in mind, the more money you have to purchase accounts, the more sustainable income you have, not necessarily income, but the more sustainable savings you have that you don't have to really touch, you can just use it for investing. The growth potential is limitless with it. And that's why this tool is so powerful. Whenever you're actually able to find ideas that are successful, that can make you money, it's good to be able to have the knowledge to be able to rinse and repeat. And this is why I make this video, so I can pass this stuff down to you guys. This is very important stuff. I hope you guys are enjoying it so far, but I'm just kind of giving you guys an idea how trading works and how I look at this. If this was a weekly chart, and this wouldn't be 1, 2, 3, 4, 5, 6 months. This could be 6 weeks. This could be 6 days. So just think about it. This could be 6 minutes on a 1 minute chart, right? A chart, the stock ain't gonna move this far on a 1 minute chart, but you get the idea, like you get the picture. If this was a 1 minute chart and you was risking $100, whatever this range would be, you would be up the same. It would be the same. The price would be a little different, but whatever that risk is, that's what it would be. This type of range, you're not gonna get this range on a 1 minute chart. But let's just, like I said, we're just using the chart, not the price, just the chart. This was a 1 minute chart, and this was your risk. Your risk area. And like I said, if you want to trade this thing up, every minute you will be raising your stop. Every minute. So you would be watching this thing like a hawk every minute to protect your profits. That's very aggressive. But like I say, in 6 minutes, you're up $700. In 6 minutes, you're up $1,000. But on a 1 minute chart, you gotta be real aggressive because you're actually watching it. 5 minute chart give you a little bit of time to breathe, actually, because you got 5 minutes to see this thing move. It's not moving that fast. Your emotions are more tame because you're not watching every single price action going on. You're actually watching one chart make its way up, grind its way up. It's trust me, it's a lot better on the mind. It's a lot better visually if you're actually staring this thing down like a hawk. So keep that in mind. Like I said, this is a monthly chart. So like I said, that's 6 months from when we got in over this red month. We got in over this red month. Like I say, it's climbing ever since. So it's May. Let's see what June has to offer. Well, in June, if we didn't raise our stop, if we let the whole June month ride out, we would have our $700 in profit, and we'd be out. What do you guys think about that? Oh man, I should did this. Oh man, I should did that. Yeah, everybody said that after the fact. Our goal is to make money. You're trading. You got in here. People paid more for it. You could have got out up here. You could have analyzed it enough to say, hey, I've made good on my $100 risk. You turn your 100 into 7. It was really worth $900. So if you really was liking that $900, you wouldn't have lost all of that $900. You wouldn't have lost them $200 to get you back down to 7. Once you start seeing this thing start to pull back, you could have been raising your stop. You could have protected some of it before it hit. And then once it got too deep, you would have got out maybe here, maybe got $800 out of it, maybe, before it really got too deep, for it pulled back too deep in there. Another thing too, just a quick little reminder, we got a nice little volume spike here. So you can see the volume low here. That means the month we're kind of resting. So as you got this volume spike here, push it up one more month. Yeah, it's kind of the end right there. So yeah, getting out at the end of this month would have definitely been the move, just based on that volume spike, based on that red resting month. That's a resting bar. Low volume there. Low volume, which is shocking that it made this move, but hey, it did. You know what I'm saying? But like I said, you're up $700-800. You should be grateful. You should be thankful. Because now you can use that money to invest in more, or just wait for another idea in Apple. If Apple is your company. I don't even have an Apple product, but this is the stock I chose today. I know a lot of people do. So yeah, so let's just say you took profits, you're out. Trade's over, you're done, you got your profits, you have an extra $700-800 in your account. You're good. Right? To get back in, you can put your another entry up here at $39, right over this red month, and see if we get another turnaround. It's unlikely, but you know, you can find you another idea. Like I said, these ideas are, if you just want to be on one stock, that's fine. But ideas happen on all stocks at different times. So you may have another stock that is just getting started here. Maybe Facebook just made this move and put in this bar, and you see this on Facebook. You're like, oh man, I just did that move on Apple. I'm gonna get in on Facebook the same way. Let's just say this exact same thing happened on Facebook. Nah, it's just saying, it's possible. It can be done, right? We are an hour and 22 minutes in. I'm probably gonna be wrapping this on up. I just kind of wanted you guys to kind of understand trading and controlling how much money you're gonna be making, how much money you're gonna be losing, being able to control your actual trading account, not just going in and just definitely don't let nobody else do it. Just definitely don't let like what's them funds and stuff. Be careful, because they're gonna charge you fees and stuff when you can just do this yourself for free. You can take your own money, invest it, put my particular order in the system, my particular idea, and let it run its course, and it didn't cost you anything. You probably would have had to pay a penny, maybe, you got 100 shares of this, you probably would have had to pay a penny in trade fees just to buy and sell. A penny? You just made $800 and you worried about a penny? Come on now. You made $800 on this? Pay the little fee, trust me. Thinkorswim is a great platform. I'm not sponsored by this. I just love Thinkorswim. This is one of the first platforms that I just love. I just love all the features and stuff in it. So you guys find something else, stick with it, learn it. But all the ideas are the same. All the charts are the same. But yeah, that's trading for you. Like I said, it happens on all time frame, monthly, weekly, daily. Just a quick tip. I don't recommend buying into red months. If you're wanting to go higher, you don't buy into a red month. So if the month is green, I would drill down to maybe a weekly or daily chart, find a nice little pattern, get in, like I say, because buyers are in control. If you're in a red month, be careful, because you may lose your money quicker than you make money in a red month. Just be careful of that. Know what the sentiment for the month is. Just kind of be aware of that. Let's move on to July. Buyers step back up. Now, I know what you think. Oh man, I shouldn't have got out. Buyers step back up. I should have stayed in this. Should have did this. I should have did that. You got to have a plan from the start. So if your plan was to get out at 31.50, if that was your plan, then take your plan and get out. You could have got back in over this month, made more. You could have made the exact same amount of money. Not the exact, because you would have been $1 off of your actual entry. But yeah, I mean, you could have stayed in here, or you could have just left your stop loss down here. So like I say, the more you raise your stop, the more aggressive. Like I say, You got a lot of green months here. Resting is needed. You know, people got to take profits. So, like I said, you woulda, shoulda, coulda, but we didn't, right? We raised our stop here. We raised it up here to protect that profit. It's up $900. You never know. This thing could have tanked. It could have did one of these moves. You just never know. You know, you could have just left it here to be safe. You're under the red bar. That's good. But yeah, okay. We left it here. We could have been up. You know, we could have been still good. We could have got some of that money back. Let's see what happens in let me see, what is this, July? Let's see what happens in August. August, we go up higher. Wow. Didn't I pick the perfect time frame? Didn't I pick the perfect time, the perfect time frame for this idea? This was back in 2017, by the way. Man, we do that. Man, I shouldn't have sold. I should have stayed in it. Well, hey, I mean, you know, you got to control something. So how aggressive do you want to be on controlling your risk, controlling your profits? You know, how aggressive do you want to be? You could, matter of fact, you could have left your stop loss down here and just been waiting it out. Now you're up over $1,000. Let's see what happens in September. Up. You're up $1,000. You lost it all, and you back to break even now. You back to your $900 area. But you know, this is just me reading the charts. And you're gonna have emotions that's gonna come into play in each month. But like I say, it's a monthly chart, so your emotions gonna be a little bit spread out. Just imagine if this was a 5-minute chart. The emotions gonna come real fast. You're gonna have euphoria. You're gonna be, oh man, I'm up, I'm green, I'm making money, woo woo. And then the red bars coming in, you start sweating, you start shaking, you start getting nervous, you start thinking about profits, you start thinking about this, you start thinking about that. Even though we knew what happened in real life, we wouldn't have knew what happened after this bar. We didn't know it was gonna run all the way up. We wouldn't have known that. So you gotta think about it. These are ideas. We can't tell the future. But if we hit our price point, we're gonna take it along for the ride just to see if our idea gonna work. In this case, we was able to make at least $1,000 out of this idea. So it doesn't always happen. There are other things that come into factor, but this is kind of the basics. Understanding charts. Green means buyers are in control. Red means sellers are in control. Little months like this is kind of a resting indecision month. But you know, I'm not gonna go over, look at that. Still climbing. That's just how strong Apple was. And did this nice shakeout. So if you would have had your stop, if you would have been trying to trail up your risk, you would have got tagged out. You would have took your profits. You would have been, you wouldn't have came all the way down here, so you'd have been good. You would have took your profits. You know, if you would have been raising it up in this area, you would have probably took profits. This bar here probably would have got you out. As you see, it's obviously, I'm pretty sure there was a lot of people with stop losses and stuff here. That's why it did this shakeout. It probably ate up a lot. The market makers probably saw that there was so many orders in this area that it actually shook out, got those orders, probably was sold off, and a lot of people was buying in this area, and guess what? Buyers stepped up again. But this is kind of a success story when it comes to trading. Look at that. That's why I picked this area, because of the move up. But as you see, the move down can be just as nasty. So pick this time frame because I wanted you guys to kind of see the potential trading and also the risk trading. And as you increase your knowledge, trading is something that you're going to be learning about on a daily basis if you're really trying to beat. Like I say, I started with the monthly chart. Like I say, these charts can be any time frame. If you're just looking at the charts, they can go for any time frame. They all look the same. They all got green bars and red bars. They all do crazy moves. They all have crazy volumes. They all do crazy stuff. So it's understanding what you're looking at. If you're not comfortable watching it every minute, go to a higher time frame. I'm not talking about day trading. I'm talking about just trading in general. I'll go to a higher time frame. If you're not comfortable on the daily, look at the weekly. I always look at a higher time frame just to make sure. Like I say, we're in a green month, I can drill down to a weekly so I can find an idea. I can drill down, if we're in a green week, I can drill down to a daily and find a good idea. We're in a green month and a green week, oh yeah, I'm gonna find an idea on the daily. It's that simple. But a daily idea is gonna give you better risk to reward. and you're gonna be able to get your targets a lot faster. But like I said, I don't want to get too advanced on it. This is kind of the basis of trading. If you're an investor, you wrote this thing, you got in, you wrote this thing all the way up, and you probably gonna ride it all the way back down if you're an investor. If you don't have any exit strategy, you're just gonna get in and just ride it forever, that's fine. I don't judge anybody. If that's what you like to do, that's what you like to do. Don't talk me out of what I do, and I'm not trying to talk you out of what you do. I'm just teaching you what I do with my trading. Excuse me. Sorry about that. But yeah, I mean, like I said, if you would have kept your stop here, you could have wrote this thing all the way up even more, made a little over probably $2,000 before it actually sold off. But you're never gonna get out all the way at the top. It's just not realistic to a trader to get out at the very, very top. It's possible, but just not realistic for you to do it on every trade. Just kind of keep that in mind. I think Apple proceeded to like I said, came back to this area almost exactly and bounced. So you know that this was a good area. Obviously that this pricing area was a good area. Also from a technical standpoint, we got this pivot high here of $32. So it kind of came back to that area. I think I went too far ahead. Yeah, where this pivot was here. So it came back to, well, not exactly that. Yeah, kind of bounced. It bounced a little higher than actually. It's supposed to came back to maybe this 34 area, but like I said, we can't control this stuff. It happens. It came back, bounced. Like I said, red month. So October, November, December, you were just looking at Apple like, man, it's just falling. All you gotta do is wait for that green month. Wait for that green month, and then, like I said, you would have got in over here. You would have had your stop loss down here. If you would have got in over this green month, like I say, 4 months down, the range of this bar is $6.75. I'm gonna let you guys do the math on that one because that's a huge risk. That's a huge R&R. We would need this thing to go $6 to get our $100 on this one. If we were just risking $100, the range is $6.75. On green bars, you want to take the high and the low of that green bar. On red bars, you can take the high of that red bar and then the close. So if you would have tried to get in up here, you probably would have lost. You would have lost it because it would have came up, it would have tagged you in. Ultimately, it would have failed because this stock was just tired. It was just tired. But pulled back, it rested. So green is buyers, red is sellers. But yeah, when it comes to green bars, you normally, like I say, you can raise your stop pretty aggressive, or you can just, like I said, you normally want to take the high and the low of the bar because you just never know how much room it needs to actually start working. In these cases, they kind of work right off the back here. From this month to this month, it kind of worked up. You would have got in, you would have been already up green. It would have kind of shook out, put you back at break even, then continued to go up higher. Like I said, you could have trailed it up here. You could have got out probably in this if you were just trading up from the bottom. You're just trailing your stop up from the bottom. You would have got out under this green bar here once it did this whole shakeout here. Like I said, you could have found another entry. But that's trading for you. Like I say, looking at these charts, I mean, you just, like I say, ran up higher. So you had a run up, you had a pull back, pushed up, and kind of ran some more. So you see, Apple was the gift that kept on giving. They do just watch it. Like I said, these are monthly charts. So any random month, you could just look at Apple, and say, hey, we got a green month. Let me set up an order. Let me set up a pattern. Buyers are in control this month. Let's see if they're gonna push this thing up higher. That's how you want to look at investing. You want to get in when buyers are in control. You want to get in when buyers are stepped up as in continuing to push this as an uptrend. This month is green because sellers pushed it down and buyers brought it back up. That was an uptrend which made this month green. That's an uptrend here. These are uptrends. This was a monthly. This was a downtrend that happened within the month. So the month downtrended $1. I mean, not $1. It just it downtrended, and then, like I said, the uptrend continued, and then it continued, and then it rested. Had a little downtrend. Nice bottom and tail here, which left its tail. So buyers stepped up here and continued to trend it right on back up. So you kind of got to look at it objectively. Getting in on this. This would have been a nice idea for me. Getting over this bar here at roughly 35, 34, 50 area. A nice little area to ride this thing on up. But you, like I said, you don't know it's gonna make this move. So we see ideas, and we, like I say, this is where, you know, putting your money where your mouth is will come into play, because you don't know what's gonna make that move. So getting in here, it could have fell back off just like it did over here. So like I say, over here, you would have lost $100, right? You would have made what, 900. Let's just say you made $1,000 on this. On this ride up, you would have made $1,000. Then over here, you would have lost 100 of that. You say, okay, I lost 100. I'm gonna wait for the next one. Over here, you would have made probably what, $300-400 on this one. Probably not 300, 400. Probably made about 1 or 2 on this one. Or you would have got, you probably made $100 on this one. If you would have got the top of this one and the bottom of this one, that range, probably had another $6 before it actually triggered. Let me see, that's let me see what it's. So roughly $6.75. So I'm gonna just say $7. So $7 from 42, 49. That'll put you up here. So let's just say you would have got $100. Let's just say you would have got $100 out of this one. You would have made that 100 back in this month. I mean, in these few months, you would have made that 100 back that you lost. You would have lost that like the first week, probably. You would have lost that $100 like the first week, because as soon as that month opened, it would have triggered you in, and then it would have came back and would have pulled back. So you probably lost that $100 like the first week. So you're like, okay, I lost on that one. So I'm gonna give Apple a chance to rest, and then I'll wait for the next point where buyers actually stepped in. So you got in here, made $100. You got tagged out in this area here, because it pulled back. It kind of ran up again. Like I said, the R&R is so wide on this one, I wouldn't have took it. This one's $7. I'm just not taking a $7 risk. $7 risk is too wide, and this is why it would have took you 5 months to make your money. It would have taken you 5 months to get $100 on this. That's why the smaller the R&R, and the smaller the risk to reward, the better, because you make your money a little bit faster. I really don't. If it's over $1, I really don't mess with it. If the range is over $1, if my risk area is more than $1, I really don't mess with it. That's my particular trading plan. It's like I say, this one being $7, I wouldn't touch it. I probably would get in on this one here, because the high of this bar is 54.50, with the close being at 52. So you can do roughly $2. So you can get 50 shares, and this would have been a better R&R over a red bar. The high of the red bar minus the by the close of that red bar, because buyers already stepped up here. So we want them to actually trend this one above this pivot high. So I hope the terminology is not throwing you guys off too much. But that's kind of how I'm looking at it. Apple just had to be the pick of the day. Like I said, each stock is, and like I said, the charts are the same. Green month, red month. That's all you're gonna get. The actual pattern is gonna be different. You may have stocks that's just going down, and there are other things that you would consider before you invest your money into some of these companies. So this is just kind of the outline. This is just kind of the basis of investing and trading. So like I say, it would have took you all the way up here, but it would have took you 3 months to get up here just to make your $100. Compared to over here, you already had $100 in that second month. In that third month, you was already up $200. And as the time went on, you're holding this thing for over a year at this point. If you made it out over here, you're holding it for over a year. So this is just a monthly chart. So with a weekly chart, you're probably holding this thing for maybe 2 months. So smaller time frames, if you're gonna be looking at it and managing it more consistently. So smaller time frames require more interactions from the actual person that's trading. Monthly, you don't have to worry about it. Like I say, you check on it once a month just to see what it's doing, where it's at. If you want to adjust something, you can check on it monthly. Weekly, it's gonna be a little bit more frequently. Daily, a little bit more aggressive. 60 minutes, you're gonna really be checking on it a lot throughout the day. 5 minutes, you're gonna be staring at it basically. So, I hope this video was informative. I hope it helped you guys. I know it's long. If you guys rolled it out with me, I appreciate it. I don't know what else to say at this point. I think that's it. If you have any questions, leave me in the comments. I wanted to make this video kind of as simple as possible. You just kind of see just a quick way to make money, and then start investing. Just kind of like, just kind of a rough patch to start investing. As you see, Apple is up to $140 right now. $139.85 is the high. $139 is where it's sitting at now. So Apple's looking good. You got stocks that, like I say, this is a You got to run up, you got to pull back, run up, pull back. This is a good uptrend. It's kind of what you want to start seeing as you start investing. You want to invest in stocks that are actually moving up. As you see from there, the stocks are actually moving up. You got to kind of be able to look toward the future, because as you see, even though it looked like it wanted to, kind of tank off here, it just was pulling back. As you see, it made a strong move up, and this was the last pivot high, $8, bounced off 14 and kept going. So you kind of, you gotta put a little time in it, But as you see, a uptrend, it's always gonna be pullbacks and uptrend. So you're gonna have a move up or pull back. You don't want too deep of a pullback, maybe 50%, maybe so. You got a nice equal pullback here. You put in this high here, pull back, you broke that high, put in a new high, and came back and retested that same area. That's an uptrend. That's basically what you want to see in your uptrend. And then you want to see it push up higher. That's pretty much what Apple did. We're over an hour and 30 minutes. So I'm gonna wrap this video up. If you guys enjoyed, you made it this far, subscribe, like, comment. I really appreciate you guys. I don't know what to say, so that's why I'm gonna wrap it on up. I appreciate you guys. Trading 101. Leave a comment if you guys have any questions. If you need more videos like this, I will definitely put them out. You guys have a good one.